What's up? It's Frank here from Altcoin Buzz, and today we are discussing Polygon MATIC, currently in 19th place, suffering the same fate that a lot of other cryptocurrencies have suffered, which of course is a massive bear market. But on the 4-hour, we are seeing some signs of recovery. I'm going to show you what those are. There's also a very important resistance level to be watching. So I'm going to tell you what that is, because once that resistance is broken, we have a very good chance at a sustained relief rally. And of course, I'm also going to be telling you about the major support levels to be watching, as well as the bigger structure which is playing out. And again, another reason why to be watching out for MATIC right now. Now, for those of you who don't know, Altcoin Buzz is first and foremost a crypto investment research company, and we have been providing you numerous 100x returns since 2017. So if you want to get in on that action, join our Altcoin Buzz Access group, where we document up-to-date research covering undervalued altcoin gems, NFT minting opportunities, and our portfolio strategies. So if you want to take part in the action, click the link up above or in the pinned comment section down below. Also, please don't forget to like, subscribe, and click the notification bell so that you don't miss any future updates. And friendly reminder, please note that none of this is financial advice. Okay, so MATIC is down 4% in the last 24 hours, which is a slightly higher loss than most of the other cryptocurrencies in the top 20. However, on the 4-hour especially, we are seeing a good sign. But before I show you that, I'm going to zoom out, of course, to the weekly, as you know I like to do. If you're a fan of the channel, if you're a subscriber, you'll know that the important thing is to always start by zooming out to see what is going on. And what happened here was that we had several weeks of red, during which we saw the MACD histogram ticking up despite the price ticking down, you see. So we had 1, 2, 3 weeks where the price was going down every week, but the MACD histogram was ticking up. And then on this third week, we also had an oversold RSI. So it was no surprise that we had a week of green thereafter. The bears were very much overextended, and to a large degree they still are overextended after this explosive move down. And now we are seeing something very interesting and important on the weekly chart, and that is this inside bar. So this inside bar, this red candle, all of its price action contained within the previous bar. That's why this is called the inside bar and this is called the mother bar. And what happens is that when you have a break outside of the inside bar, outside of its high or below its low, then you often see continued price action in that direction. So that is why I've placed a resistance directly above this bar and directly below it at its high and its low. And we'll see how that translates onto the lower time frames. Okay, now we're done with the weekly. We'll go down briefly to the 3-day. The 3-day again is showing good signs of a reversal. We have the MACD histogram ticking up steadily over the past 7 days. The RSI is currently at the 35 level, which is still in bearish territory. Admittedly, we really want to be getting above sort of 40, 45 really before we can be considered in bullish territory. But of course, we're looking for a potential bottom here. We're not yet looking for a confirmation that we are in a relief rally. Now, on the 3-day chart, we can also see that there is a major support here at the $0.2972 level. We touched down multiple times in the past on that level, and we had a very quick bounce from this level, just above this level actually, where we came down to the 0.315 level. So again, this is good that we have a major support below us. But now look at this. Look at this diagonal resistance line, which formed ever since the 27th of December. We had one touch at resistance, 2, 3 touches, and now we are very close to this resistance line. So we've seen this on several other cryptocurrencies. Some of them have broken their diagonal trend line. Some of them have actually are just about to potentially break through them. So really, it's a very interesting time right now, because yes, we don't have any clear signs that the reversal is starting, but we do have some very clear levels to be watching, which once broken, if you're paying attention, if you've got notifications, if you have, for example, TradingView on your phone, you can have a notification set up that when we cross a certain level that you want to be there trading or potentially entering a longer term investment. And that's what you want to be doing now. And I'll tell you about which levels you want to create notifications for in just a bit. Okay, so now that we're done with the 3-day, let's go down to the 1-day. I think there's not too much to be said here on the 1-day time frame. So I'm going to actually go down to the 4-hour time frame now so that I can show you in more detail what you want to be watching out for. So remember, we have this long diagonal resistance line, which we are very close to. Now, in addition to that, we have this resistance line, which looks like it's sort of strangely placed because we have several candles which closed directly above it at the same level, the 0.63. But recall that this is the top of the weekly inside bar. So the way I see it is that once we cross this line, we will have not only crossed the diagonal line, but we will also have crossed this horizontal line. And not only that, but if we look at the EMAs here, you see that we will also be above the 200 EMA, which is another good sign. So really, I think this is the critical level to be watching for, the $0.597 level. So set your notifications for that level, because once we cross that level, I think there will not be much resistance. There's a little bit of resistance still ahead up until the sort of 0.68 level, but really above that, there is not much. So we'll place those resistances, the 0.68, and then if we break that level, what we want to do for resistance is zoom out and use our trusted RVP indicator to let us know at which prices there has been contention before, as which prices we've seen a lot of trading volume. And as we can see, there actually has been a fair bit of trading volume between the 0.7483 and the 0.86. So it's quite tricky to see where the very clear resistance would be, but I would suspect that somewhere in the middle of this zone, let's say that approximately the $0.85 level, but really it's a zone which goes just above that and just below that. And when it comes to support, again, let's come down to the 4-hour time frame. We are seeing support at the previous daily low, which is the 0.4179. Then this is the next support, which the 0.297, which I mentioned before, it has a lot of history behind it. We didn't quite reach that, but I suspect that we would still see potential support coming down to this level, or at the very least this zone. And then if we break through that, then again, we want to be zooming out and looking at the VRVP. And here, if we take the previous price action, we can see that the beginning of the support will start approximately at the 0.1352 level. So if you really are very conservative and you want a much better price, that might be a price to wait for. But I think the best strategy, which Matty mentioned in the video yesterday as well, is to dollar cost average, because catching the bottom of the market is traditionally, typically very, very hard and not recommended really, because no one knows exactly where the bottom will be. What we can do is we can look at certain indicators which suggest that we are likely at the bottom, but if you're waiting for the absolute bottom, you're very, very unlikely to get it. And if you dollar cost average over the coming sort of 6 to 9 months, or maybe even 3 to 6 months, you're likely to get a very good price for the next bull market. So just to summarize, the resistance levels are the 0.597, 0.681, and the $0.851 level. And the support levels are the 0.417, 0.297, and $0.135 levels. Now finally, I want to show you the MATIC BTC chart. Again, very important to see how your favorite cryptocurrencies or your cryptocurrency investments are doing compared to Bitcoin. So we see something very interesting here, a very clear impulse move up with a lot of volume in the middle of June here, between the 19th and the 24th of June. And we haven't seen this type of interest in the market for about almost 195 days since this bear market started. So this is a very good sign that again, one sign that we are potentially reversing. Of course, we still don't have an uptrend. We have one impulse move up and one move down. So again, we really want to hold this 2,202 SAT dollar level. And the great thing about breaking the previous high, of course, will be that we will create a actual uptrend, which we haven't seen since the end of last year. So we really want to break the 2,947 SAT level. So in summary, yes, we are in a downtrend. We have not yet broken out of this descending wedge, but it's going to be very notable if we break out of the 0.597 level. That will likely start a new uptrend. And we are seeing strong signs of a potential reversal on the 3-day chart and also on the 4-hour chart, since we recently broke this double top at the $0.48 level. So it's all systems go for the bulls. They have to prove themselves still, but they are showing signs of strength. All right, if you enjoyed the video, don't forget to check out our other videos up here. We cover technical analysis, fundamental analysis, on-chain analysis, the news, and all the good stuff. So don't forget to like, subscribe, and click the notification bell. And with that being said, I'll see you in the next one.